Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another video. Hopefully, you're all having a magic Monday so far. It is going to be a very exciting weeks for the markets. Last night, and this is what this video is going to be about, we had some breaking news come from the European Central Bank that is talking about a coordinated central bank action to enhance provision of US dollar liquidity. We're going to be diving into it, guys, what this means. This is a bit of a surprise video, but this news is, and it won't replace the daily cryptocurrency market update. It will go very nicely with it. This news is really significant because, and we've brought this up a number of times, we are in a very similar sort of scenario to what took place in 2018 and 2019, and of course subsequently led to March 2020. Are we going to have some sort of a repeat of March 2020 in the not too distant future? You know, that's the main thing on my mind, and there are a number of things that maybe indicate that. But what we'll do, guys, is just cover the news. We won't really speculate on what this could mean further down the line, and really look at what sort of immediate effects this may have on the crypto space. We know the dollar is getting hammered. We know Bitcoin is doing very well with banking crisis, hashtag banking crisis as a backdrop, because it was really born into bank bailouts. And we can see this is the Fed opened the emergency lending tap. You can see just how volatile this has been. You know, you had similar situation back in 2020 and of course 2008. So there's a lot of, and this is also very interesting, which we'll talk about, which is assumably why they're now looking to enhance liquidity through dollar swaps to make sure that liquidity is there. It's a very low liquid environment. It's why we got money out of the markets last year, 2022, was because we understood the game of liquidity and how it wasn't going to accommodate the market that we were in. You know, some markets do well in low liquidity, others don't. But assumably why they're now sort of turning on the dollar swap tap, if you will, to make sure those dollars are there so that you don't have bank failures. This is total assets, and you can see this is absolutely shot up in a similar manner to sort of 2017 going into 2018. Now, this green is the total assets. In red, you've got bank failures. Typically, the green leads the red. So are we going to get a similar thing taking place? Well, again, I don't want to speculate on that. We will be covering that in a daily crypto market update, so stay tuned for that at 1 p.m., guys. So, coordinated central bank action to enhance the provision of US dollar liquidity. The ECB and other major central banks to offer 7-day US dollar operations on a daily basis. New frequency effective as of March 2023 to remain in place at least through the end of April, to support smooth function of US dollar funding market. So there's been a congestion of funding markets, and this was the interesting thing. I remember the Bank of International Settlements did a report where they essentially said, look, we think there is about $80 trillion of dollar swaps that people aren't accounting for. That is a lot of money, guys. And the problem with when you have a higher yield on the dollar debt that backs the dollar is you need more dollars to service it, and this is all coming at a time where they're not printing. It's kind of like trying to run a car with no engine oil. Eventually it goes and the car just ceases, right? I have a brother who actually did that rather stupidly. Trust me, the car is knackered after it. So this is kind of what's going on. This is why they're providing this, assumably, again, to stop the bank failures from following the total assets. So the Bank of Canada, the Bank of England, the Bank of Japan, the European Central Bank, the Federal Reserve, and the Swiss National Bank are today announcing a coordinated action to enhance the provision of liquidity via the standing US dollar liquidity swap line arrangements. This is a form of stimulus, guys. It's not QE, so to speak, but it is very much a form of stimulus because, you know, look at the words here, and I've seen many people argue that this isn't providing liquidity. Okay? Provision of liquidity. So what they're essentially trying to do is make sure the banks that need the money have got the money, and without them doing this, it wouldn't be there. So it's a form of them adding to sort of liquidity, and we know what drives markets. And this is why markets have done as well as they have. Of course, Bitcoin's been doing it very well on the backdrop of sort of bank failings and what it was born to do. And, people are getting a bit sort of worried about altcoins, but actually it's very natural that Bitcoin leads the pack. It's where the largest money goes first. So to improve the swap line effectiveness in providing US dollar funding, the central bank currently offering US dollar operations have agreed to increase the frequency of 7-day maturity operations from weekly to daily. These daily operations will commence on Monday, the 20th of March, so today, guys, 2023, and will continue at least through the end of April. The network of swap lines among these central banks is set of available standing facilities and serves as an important liquidity backstop to ease strains in global funding markets, thereby helping to mitigate the effects of such strains on the supply of credit to household and businesses. Actually, last night I did a Patreon. I've got a Patreon. We do weekly meetings where we get together and we try and sort of plot how we're going to play this market. And we looked at, actually, there was news yesterday that 2 major European banks had actually gone to the ECB and said, listen, we need help. This is from Lynn Alden. Please go and give Lynn Alden a follow, guys. One of them as genuine as they come when it comes to being a financial analyzer. Small bank cash as percentage, you can see it's pretty much down at where the repo initial spike took place, and you can see large banks is getting there. This was a very interesting chart that's largely overlooked, because actually you can see that you've got your total assets that's rocketed up here in a similar way to 2007 that was the precursor to 2008. Similar kind of scenario that we're in, guys. Remember, we're bullish on the crypto space right now and have been since the start of the year. We think there's a window of opportunity. Ultimately, this could be bad for dollar, because it means the dollar demand that's there has now been filled by the central bank. There are a number of interesting things going on with the dollar. I think this, if you want to maybe do some sort of head and shoulders draw here, this could just be a retest. Double top coming down. And certainly the kind of fundamentals of them providing dollars in the form of the swap market would maybe support that, which could be good for crypto. So it's very interesting what's going on right now, guys. I will keep you up to date. We will maybe explore this a little bit more. We'll pull up the actual, it just says the same thing, basically, the official announcement. The Swiss Central Bank, I think UBS actually bought Credit Suisse. The problem with that is there's lots of people that are going to lose money as a result of that purchase. And again, I think this is why I actually think Credit Suisse is why that certainly they've gone after the swap market, because Credit Suisse is going to put pressure in the form of banks taking losses, and then they've got to also play their positions, pay the positions they already have. I think this is largely as a result of Credit Suisse and everything going on there. But yeah, never a dull moment, guys. This has been nothing short for me this year of exhilarating, which sounds sad, I guess, being that we're just financial analyzers that are trying to make heads or tails and make some money out of this market. But it's been a fantastic year thus far. Long may it continue. But I do believe that there is a bit of a shitstorm coming down the line, guys. We did studies on 1931, 1969, and how the markets acted, and 2 years later, how subsequently you had a total monetary change, whether that be the FDC or whether that be the Nixon shock. Is this going to be a shock that takes us from paper money to just imaginary money? I do actually or have a theory that Bitcoin could have been given to us, the masses, to basically get them used to the concept. And then when they create their coin that they deem valuable and ideologically convince people is valuable, then we move on to a system like that where they don't have to back it by debt, because debt is ultimately, you're seeing the constraints of it now. You have to continue. The problem with a debt cycle is it's inflationary or a debt system is it's inflationary by nature, because there's interest on it. So yeah, That's all I've got for you guys. Stay tuned for our daily cryptocurrency market update. We'll dive more into the markets, more into Bitcoin. You guys know that we've been playing this beautifully. But this is interesting news that's unfolded, and I felt like it was important for me to make a video sort of maybe clarifying a little bit about what's going on. All I've got for you in this one, guys. You enjoyed the content, like as always, appreciate it. So as a comment, and I'll catch you in the next one. Thanks a lot for watching, ladies and gentlemen. See you in the next.